Hey everyone, in this video we're going to talk a bit about dilution. First, I'm going to go over what it is. I'm going to go over my experiences and how I learned about it and how it functions in the penny stock world. And then we're going to talk about a bit of how it is currently impacting one of the popular Canadian marijuana stock companies. So dilution is essentially when a company issues shares to raise capital or for whatever reason, and because of that, the stock price drops and we see an adjustment from the market. So dilution, you have to think of it, let's say you have 10,000 shares and that represents 1% of a company. If the company then issues more shares, your 10,000 shares are now worth less than 1% of the company. You can also think of it in terms of market cap. Market cap is calculated by outstanding shares multiplied by the stock price. So if one day the outstanding shares is this number, then there's dilution. The next day outstanding shares are higher, the stock price has to drop to have the same market cap. So if the market cap of the company is the same one day to the next, the price of the stock drops to adjust for the increase in the amount of outstanding shares. It's also important to understand how share structures work. You have authorized shares in many places in the US. I think it's required in the US, not so much in Canada, where you have a limit. This is the maximum number of shares this company can issue. And you can change that limit through votes with shareholders, but that's really the only way you can change it. And you see the share count increase. Outstanding shares is the number that has been issued. So if my authorized shares is 1 billion and my outstanding shares is 900 million, I can only issue 100 million more shares before I'm maxed out. And what a lot of companies will do is they will then either vote to increase your authorized shares to create space for further dilution, or they will reverse split. And that's why reverse splits are so often viewed negatively in the market, because that reverse split often opens up the door for further dilution. So you'll see in the penny stock world, and this is where my experience is, and I want to differentiate, there's different kinds of dilution here. My experience is more what I'll call death spiral dilution. There's definitely dilution for companies that are well established, have significant cash flow, and they need to see expansion or whatever their goals are as a company, and dilution is inevitable. Essentially, that's why that's why companies are public. Companies go public so that they can raise funds through issuing shares to shareholders. So it's definitely a healthy part of the functioning market for many individual names. But I'm talking about death spiral, which comes from the penny stock world, and that's where I learned about it. And you have people that are interested in penny stocks because of their very small micro cap and their market cap being so small, I should say. And rather, if someone has $3,000, they don't want 10% a year. They want to 10 times their money. So they go to the penny stock world and they look at examples. Well, Monster Drink, that was a success story. Meanwhile, the success stories make up about 0.1%, making that number up, but it's a fraction of a fraction of a fraction of the amount of failures that there are in the penny stock world. So I'm speaking specifically to pink sheets, over-the-counter markets, and it is where a lot of scams take place. It's the Wild West. There's very little regulation, and what you will see is individuals run certain companies. And back in my early days when I was in the penny stock world, I was all about fundamentals, which may seem odd as a chart guy. Now I'm all about the charts. How do you think I got here? I got here from learning experiences, and I paid giving back 5 figures of my profit in the penny stock world to learn these lessons. So I used to read financial statements, and I quickly determined that the most important factor in the penny stock world is dilution. So you have these CEOs that'll start up a penny stock and they will run it into the ground. The company's never going to be profitable. They don't have any significant cash flow. They sell a story. And it's important to recognize that anything that you hear from a company via press releases, via interviews from the CEO, it's all absolute best case scenario that you can possibly hear. And they don't talk anything about the negatives. It's their marketing team is their press releases. And you have a lot of people that latch on to the story of a penny stock, and the only thing that they're exposed to is press releases and words from the CEOs and from other shareholders. So you get this bubble of only hearing good things, and they don't talk about the bad things at all. So you don't get that side of the story. So it's always rah, rah, my stock's the best. And you'll see that when stocks start going down, penny stocks, it will be attributed to short attacks. Oh, these shorts are going to get so squeezed, or manipulation, or whatever the reason is. It's never dilution. And I quickly learned, again, let's just, the quick story is, fresh out of college, following a penny stock, rare earth minerals, metals, and through due diligence, I turned $7,000 into $49,000, which is a very significant amount of money fresh out of college. Okay, that's road tripping money. I don't have to get a job for a while. And so that success pruned me, groomed me to view it as I'm right. I'm right about my fundamental analysis. This company is doing well. Meanwhile, it was just a short-lived pump, and then the dilution cycle kicks in, and we just dump and give it all back. And I watched it slowly just give it all back. I gave it all back. And I will never do that again. And that's why I am now 100% focused on the charts, not 100%, but way more focused on the charts than I am with fundamentals through this experience. So what you will see happen is, this is how companies pay to keep the lights on, to pay their salaries. That's the big one. These people are getting paid. The CEO, the CFO, they're all getting paid for by shareholders who fall in love with the story and buy. So knowing that these companies are never going to be profitable and be able to raise their own funds, what these CEOs and these teams will do is reverse split. Because the stock price gets low to a certain point, and that's really their only option. There are two ways that you'll see a company reverse split. They'll either do so, and then they'll put out a press release, we're reverse splitting so our stock price is higher so we can look to uplist. That PR is very often BS. The company will never uplist, but they can put out the PR that they have a goal of uplisting. They're not lying, but it's never going to happen. The other reason that they will reverse split is when their outstanding shares hit their authorized shares. If I can only issue 1 billion shares and I'm at 950 million, well, I'm the CEO, I want to get paid next year, and we got to pay for whatever small operations we've got going on. So if you're not going to be able to get the votes to increase authorized shares, you reverse split. And so what a reverse split does, let's just say 2 for 1. If I've got 900 million outstanding shares out of a maximum of 1 billion, my stock price doubles with the reverse split and the share count is cut in half. So anybody that holds shares, if I hold 1,000 shares at $2, I now hold 500 shares at $4. Same value, but the outstanding share count now has, what do we say, 900? So we're at 450, now has 550 million more shares that can be issued before you hit that maximum again. So it's this death spiral, because what you will see happen is these shares are issued oftentimes to companies or banks or whoever, and you might be thinking, who is lending these penny stocks $50 million? And the answer is these companies or banks or whoever it is that know the game and know that they will get these shares at a massive discount. Oftentimes you'll see convertible debt. Look for these things in financial statements. Find convertible debt, find what the financing deals are, and they often tell you, these shares will be unlocked in 6 months. And you can say, okay, well, the deal was July 2021, so we know August, September, October, November, January 2022, these shares are going to become free trading. And oftentimes these companies that give them money for these convertible debt, it'll be something like 15% discount over the average trading price of the last 30 days, something like that. And so what that allows for, another thing you'll often hear people say is, who's selling down here? That's who's selling down here, because they got shares at a massive discount. They don't care about the company. They don't care about how beat up the stock price is. If they are able to sell shares at a profit that they just issued a loan for, they're going to drive it into the ground. And that is what happens. You have this endless supply of shares hitting the market, and you have the gullible retail public buying into the story, and they eat up some of that excess supply with some demand, but it's a tidal wave of supply, and that small amount of demand cannot offset it. And so you see it just drive into the ground. And we're seeing that right now. I'm talking about Aurora Cannabis in the Canadian cannabis sector. And it's interesting for me to observe this happen, because I'm watching it and saying, I've seen this dozens of times, but I've never seen it from a market cap that started so large. I've never seen it from such a large market cap dwindle to what we have now. And if you look back at the adjusted price, and that's the other thing, when you reverse split, you can kind of hide it. You know, the stock price right now, I forget what it is, maybe $1.60, $2.60, whatever it is. Okay, it's real beat up, but it's not absolutely crushed. If you look at the pre-reverse split levels and adjust for them, it's trading at like 17 cents. So essentially the $2 that it's trading at right now, it's less, it's 168, I think. It's trading at 168. The all-time high is $150. It's down 99%. It's never going back there. It's in a death spiral. Now, I can't say with any conviction, I haven't read the financial statements in depth, I can't say with any conviction that it's going to be driven into the ground, but again, I can compare it to things that I've seen time and time again. And because the OTC penny stock world is such the Wild West with little regulation, you will see these CEOs drive a company into the ground and they'll hop to another company and they'll do it again. So if you've seen the movie, The Wolf on Wall Street, and how he was scamming people in the penny stock world, that was going on and that is still going on. And you can research these individuals and see the companies that they jump from and see that it's all the same game. They get paid, they get their salary. They get their salary from issuing shares to retail that is gullible, and then they keep it going. So some of these people are getting, you know, cushy $200,000 a year salaries to drive companies into the ground that they knowingly will never make a profit, and they knowingly will be erasing any shareholder value that anybody that buys another company will have. So again, I'm speaking in absolutes here. It's not every single company, but it's the vast majority. And this is the way that the penny stock world works. And it's relevant for crypto as well. If you're really big into a cryptocurrency, you have to look and see, are they able to issue as many coins as they want? Because if they are, that leaves the door open for endless dilution. So these are very important concepts that you don't really learn about unless you start losing money. And honestly, this is the first thing that anybody trading in penny stocks or crypto or anything should learn if they are considering long-term investments. This is the most important factor. What is financing like? What is convertible debt like? What are the outstanding shares? What are the authorized shares? And you find this information out through reading financial statements. So hopefully this gives a little bit of insight into the way things work. Happy to answer any questions. And hopefully this is opening either your eyes, or maybe if you've got a friend that's really big on a penny stock, send this clip their way, because that was the big one for me. As soon as I learned how dilution worked, and as soon as I watched all those gains go back down to zero, I realized this is how the game is played, and this is why a lot of companies are listed on the OTC as penny stocks. Thanks for tuning in. I'll see you soon.